Welcome in, folks. We got a four-piece here today. 4 videos up here for me to react to. First one up here, Katie Stockton expect one more market downdraft before the correction phase ends. That should be an interesting one to react to there. Then we're going to get into this one talking about NVIDIA, ARM Holdings, and a few other stocks. Then I want to get into this one here. One of the most powerful themes this quarter is the energy transition super cycle. I want to see where she goes with that one. And then last one up here, we're going to talk a little inflation. Oh, always a fun subject to speak about. Got a brand new workshop for you guys. Recorded this one last week for you. 7 steps to 7 figures plus in stocks. It goes over those 7 steps in depth. Kind of teach you some growth hacks in that video, how I learned to, scale faster, and then how to implement those 7 steps. So free access to that. Pinned comment down there. Appreciate y'all joining me. Smash a like. Make sure you're subscribed. Let's get into this.
With Katie Stockton, Fairlead Strategies founder.
Cheers.
And managing partner,
Happy
as well
week.
as a CNBC
Happy week.
contributor. What is it? It's 4 weeks in a row. Is at the Dow and the S&P, and the best week since December. And this was even after we're thinking higher for longer, and maybe even a, some people say no, but I think a cut or a hike could be in the car. It's not a 0% chance, Katie. So what happened momentum-wise?
Well, there is short-term upside momentum on the back of the pullback, right? So we saw about a 6% downdraft for the S&P 500 and now a 6% or so rebound. And that puts us back to square one. So the market now is at a proving ground in terms of short-term resistance. For the S&P 500, the level is about 52.60, and we are looking for one more downdraft before we see new highs logged. We could see maybe a brief new high, but we're looking for this rally to fail and give way to one more downdraft before the corrective phase ends. So we're seeing that sometimes corrections unfold in this ABC fashion, and we see the April wave as the A wave, this current wave as the B wave, and we're still awaiting the C wave. And we say that because the intermediate term momentum is still to the downside, even though we've had this very strong bounce. And I think, Joe, what you're alluding to is that sentiment could actually be getting a little bit complacent. Some measures show it, others don't. We're watching the VIX in particular because the VIX is really quite oversold, as you can imagine right now, and very, very close to strong support on the chart and no resistance until about 21. And we've seen momentum behind the VIX, which is sort of an EKG for the market in a way. We've seen momentum shift to the degree that we could be getting into a more highly volatile environment going forward.
So my personal opinion, are we going to see another big downdraft in the market? There's 2 ways we could see another short-term. What in the world with a balloon? I don't know what just happened. Okay, balloons just flashed across the screen, but whatever. So there's 2 ways we could get another major market drop. One way would be NVIDIA misses next week, right? And when I say misses, I don't even mean necessarily miss on revenue or EPS, just like something guidance related, right? Like it's a little weaker guidance here or there. That would put a whole damper on the whole entire market, right? And I think that could bring down the market. Another thing is if the next time inflation numbers come out, which actually shouldn't be very long from now, if inflation numbers came out hot again, that could send us down as well, because that leads once again to more fear about inflation's not done, higher for longer, does the Fed have to raise rates, those sorts of things. So either one of those scenarios could bring down the market more short term. So just something to kind of factor in there. If inflation comes in good, better than expected, right? And NVIDIA knocks you out of the ballpark, then you're not going to likely get any sort of major correction in the market.
Calling the shots right now, the generals or the troops? Has there been enough of a broadening to where we don't need to watch Apple every day or I don't know, any of the Magnificent Seven? It's still them, isn't it?
I went back and looked at the year-to-date winners on the sector front just today, and we have communication services up there, even utilities, energy, and then technology. So it's not been all about the mega cap complex this time around. We do have good breadth behind the market, and that's something that does support the bull cycle beyond this corrective.
I don't even know why he brought up Apple. Apple's just irrelevant to the market at this stage of the market. It's been irrelevant for really like 2 years now at this point in time. This market's really all about NVIDIA. Like NVIDIA. Apple, old news. That's why the stock doesn't go anywhere, right? It's just, it's Apple. Their iPhone units are down 10%, services up over 10%. So that's kind of offsetting things. Sleepy.
That we're anticipating. We do think that yields are really the driving force here yet again. With 10-year yields, they look poised to bounce, and that could instill that next down move for the S&P 500. But we'll be primed and ready to buy into that weakness. We're just waiting for those intermediate term metrics. These are things for the technicians out there, like the weekly MACD indicator, the weekly stochastic oscillator. We want those things to look better before we can feel confident adding back to take advantage of that stronger breadth.
You can't chart CPI or core CPI, can you?
It would be so slow moving. It wouldn't be probably the most worthwhile exercise.
That's what will inform the next move in rates, probably. So if you think yields look like they're ready to rally, in other words, bonds look like they could sell off more, that could bring the next, B wave you called it for the S&P.
C wave, right.
What is that at 480? What does it indicate on it? What's the terminal yield on the 10-year it indicates?
We expect a fleeting bounce for yields. So, and certainly the PPI data could instill that, right? Just a brief knee-jerk reaction higher. And that's when we'd actually be adding fixed income exposure, because we have in 10-year yields still that loss of long-term upside momentum. So we've been calling for a lower high, of course, versus 5%. We don't think we're going to see 5%.
See, this is a problem with some of these folks in the market. They make the market so much more complicated than it really has to be. She's then talking about yields. Well, what would affect yields? Okay, listen. Don't make the market more complicated than it is. It all comes back to inflation numbers. If inflation numbers come out really hot, that will affect yields. And so yields is then a byproduct of inflation numbers coming in better than expected, worse than expected. Like yields is a byproduct of that, and a byproduct of how the market feels about where the Fed might or might not go over the next 6 months, 12 months, 3 months, 1 month. So that's what factors in. And so a lot of times these Wall Streeters, they make it a byproduct of something. Like I always come back to what's the if this was a cartel, like who's the head of the cartel? Okay, like we need to find that person. Not the ones in the street, not the runners, not the one distributing. These Wall Streeters are looking at like the low level stuff, and I'm like, no, you got to go to the source. Go to the source, man. The source. What actually affects all these other things are companies like an Nvidia coming in way better than expected, way worse than expected. CPI, PPI coming in way worse than expected, way better than expected, and then off of all that, then you get all these movements and these byproducts. Speaking about NVIDIA, let's get into NVIDIA.
Plans of their own to develop their own AI chips. Christina Partsenevelos is with us now. Obviously, all eyes are on NVIDIA, and they report on the 22nd of this month. But what about this ARM report? What's it mean?
I'll get to NVIDIA in a second, but it seems everybody wants a piece of this AI pie. So the Nikkei is reporting that ARM is setting up an AI division with plans to actually launch an AI chip prototype by 2025. The company has supposedly already begun talks with foundries like TSMC for capacity to support this new part, which could, and this is according to the report, lead to an eventual spin-off of their AI chip business, which would be a positive for SoftBank given its 90% stake in ARM. I reached out, ARM wouldn't comment, but this AI chip would mean two things. First, it would be a major pivot for ARM's business model, given that it focuses on royalty and licenses. And then secondly, it would put ARM in competition with its current customer base, like NVIDIA, like Apple, et cetera. So that's why you have some analysts right now, Wells Fargo, I read a note, Wedbush, they're a little skeptical of this report thus far. And since you guys have brought up NVIDIA so much, and we're talking about AI chips, let's talk about what's happening on May 22nd. We know the share price is up 1% right now. It's hovering 5% higher in the last month, but that doesn't mean loyalty is gone. Jefferies estimates that AI as a percentage of total chip revenue will go from 5%, which was back in 2022, to 25% by 2027. So it's going to continue to drive growth, especially with all of these deep budgets and pockets from the hyperscalers that are promised to spend. And NVIDIA remains the favorite, given its control over the entire ecosystem, the software that's included, as well as the launch of its new Blackwell GPU chip for the second half of this year. So speaking of NVIDIA, the early whisper numbers, we often look at this for NVIDIA specifically, and this is according to Wells, is that it's going to be $26 billion for the April quarter, and that's total revenues, versus the street estimates at 24.5 right now. That means out of that 26 billion, at least 23 billion has to come specifically from data center revenues. And you were talking about valuations. Analysts analysts keep revising their estimates.
Before we go further, do I think NVIDIA could come in at that $26 billion number? My opinion is I see why not. I can't see why not. Honestly, I can't see why not. They have pretty consistently beat around $2 billion a quarter. So I don't, or more. And so I don't see why they can't come in and beat that number, right? They've been they put out the guide. The guide will usually be higher, but it's not too crazy higher than what analysts are expecting. And they come in and beat the numbers. So, yeah, I don't see why they couldn't.
For NVIDIA, just leading up to this report, and bulls would argue that the stock is trading at 37 times forward PE ratio, and you compare it to AMD at 44 times. ARM, you wouldn't even compare because that's way higher, 70 times. But what's important for this company is how the stock reacts post-earnings. 16% higher in one day, like last quarter that we saw. There was, 24% the previous quarter. That's going to pull in more money into semis. Or is it going to go lower, and that's really going to drive momentum out and maybe into software?
Christina, thank you. Christina Partsinevelos, appreciate that. It's hard to find people getting negative ahead of the print on the 22nd. Adam Parker, who's gotten, I think, incrementally more cautious / negative on mega cap tech, won't go there when it comes to NVIDIA. They're still bullish there. Jeffries says that pullback that we had, Joe, was the time to reload. They raised their target to 1,200. Too early to sift out the winners and losers in the AI basket yet, but NVIDIA is our favorite. I mean, some people would quibble with maybe it's not too early. I mean, the street has obviously placed its bet that it's not too early to say that NVIDIA is undoubtedly one of the winners. Doesn't have to be the undisputed winner, but it is no doubt thought of as, if there's a couple of winners, 2, 3. They're in that mix, no matter what.
Yes, and I agree completely on what Adam is saying about NVIDIA. It's the anchor of the AI halo. And I doubt very much that even if NVIDIA was to deliver an earnings report, which would be disappointing and we'd see the price decline, I don't think very many people would move so quickly away from NVIDIA. So, as I said, it seems to be the core anchor AI holding. What's interesting to me is what the effect is going to be of NVIDIA's earnings on the rest of the AI halo. Because if I take 3 names.
About like critical?
So if I take 3 names, if I take Broadcom, I take Cadence Design, which I talk about a lot, and I take AMD, each of those stocks had their peak in March. Those stocks have done nothing over the last 60 days. They need something to resurrect performance, and it's really, they're reliant on getting something positive from NVIDIA to do that. So I really think the AI halo is where you want to focus on off this upcoming report.
I've thought, I have a thought process in regards to where NVIDIA stock price is going short term. I thought it could hit 1,000 plus before earnings. We'll see if it happens. I wouldn't count it out. I mean, I know it looks pretty far away considering NVIDIA earnings are next week and it's 906 right now. To sort of climb to 1,000 plus is a big percentage move there, right? But I don't know. I've kind of always thought like it would be 1,000 plus, and then if they come out and knock numbers out of the ballpark again, then 1,200 after earnings. But we'll see. We'll see where things shake out there. There's no reason for me to believe guidance is going to be bad or something like that, because we know. They got the new Blackwell chip coming out back half of the year. We know demand's going to be insane for that. We know spend continues. I mean, every big tech company's trying to get their hands on as many NVIDIA chips this year as possible, right? Which is really going to push into next year and following years as well. So there's, I just think it's a very tough stock to bet against. It really is brutal, especially considering the valuation's not crazy on it. It's at forward P under 40. With those sorts of growth rates and that sort of positioning in the market, the center of the universe, that's that's a hard one to say it's overvalued. Next one up here, one of the most powerful themes this quarter is energy transition super cycle. And by the way, also in regards to NVIDIA, right? Wait to see that software revenue over these coming, next 2 to 3 years. That's going to get a lot of people very excited.
Retail earnings will take center stage this week. Stephanie Link joins us now. She's Chief Investment Strategist, Portfolio Manager at Hightower Advisors, and a CNBC contributor. We're not done with earnings.
Oh, no,
obviously, Stephanie, we got Home Depot tomorrow, a couple other, Walmart, so retailers and the like. But there is an interesting piece, lead story in the Journal, a little bit different than.
So tomorrow, Home Depot, Alibaba. Wednesday, Cisco. Then Thursday, Walmart is up. Interesting.
I think your take, you liked the overall results, thought that things looked like they were up about 10%. The Journal.
There's three other companies that still have to report this earnings season that I'm looking really forward to. Obviously, NVIDIA's one. Second would be RH. Third, Nike.
Point out, though, if you disappointed, you really got hurt. And even if you exceeded expectations, you didn't get quite the bang for your buck you've gotten in previous quarters. To me, that sounds like multiples with perhaps no interest rate cuts. Multiples are going to have a hard time expanding further from where they are. If you beat expectations, you get a little bit of a bounce. But if you don't, then your stock goes down with the lower earnings and with the multiple staying where it is or going down.
Yeah, but I think if you don't have multiple expansion, but you still have earnings going higher, right, that actually will be, that'll be enough, Joe, I think. And I always call earnings season silly season. You know that because you have these absurd reactions. Even if you miss some stocks being down 10, 15, 20%, it gives you an opportunity for sure if you have conviction, obviously, in the idea. And if it doesn't go up that much, but they actually do beat, that also is an opportunity. Stocks follow profits on the way up and on the way down. So the names and the sectors that are seeing earnings revisions higher, obviously, the stock should go higher over time.
Home Depot has been uncharacteristically at least as far as the results, it hasn't been the stalwart that it's usually been in recent years. The stock, though, for a while had a really sharp comeback, even though the fundamentals didn't improve that much. I don't know what's happening now with the stock. Maybe it's inflationary expectations reemerged right about where that stock peaked, I think, and inflation doesn't help Home Depot usually.
Well, higher lumber prices will help, actually, Joe, for this quarter. Lumber prices are up about 13%. Home Depot, if you step back, they actually were a huge beneficiary during COVID. We were buying everything for our homes because that's where we were living, right, 24/7. So they benefited in COVID. And then you had that that post-COVID hangover, unfortunately, and you have had 5 negative quarters of same-store sales. I think you're coming to an end of the negative comps. I think you have easy comparisons. As I mentioned, you have a little bit higher commodity prices. They are focusing more on Pro. They just made that acquisition, SRS, and now Pro is going to be 50% of their total revenues as opposed to Lowe's, which is 25%. I think Pro is going to hold up better than do it yourself, and that's why I think the stock is poised to do better. But obviously, higher interest rates is the concern, and overall concerns about housing. I'm a bull on housing because I think we are 5 million homes short in this country, and if you talk to any of the home builders, they have underproduced for 14 straight years. It's cheaper for them to buy back their stock than to actually buy land. So to me, I think housing over the long haul is going to be very favorable. Maybe this year you have some ups and downs and some volatility, but I like the way to play it through Home Depot.
Such a flawed way of thinking. In regards to this home builders, right? Of course, all home builders are going to say we're underbuilt. Yeah, we need to build more. Every CEO in the world feels like their company's products are underserved and they're underbuilt and they need to build more. And there's going to have to be catch up here. And what do you think Tim Cook would say if you talk to him one-on-one? Oh, people haven't been upgrading their iPhones as much. A big super cycle's coming, right? I'm sure Elon will say the same thing about Tesla. I'm sure Amazon feels the same way about AWS and all their businesses if you were to talk to them, right? That's every CEO is going to feel like, oh, the market hasn't been buying enough of our product and service, but they're going to do that in the future, right? That's the name of the game. So I don't take any weight in what home builders say about their opinions on this and that.
I mean, comps aren't going to be, there's going to be another down quarter, right? Or this isn't where you think things are finally bottoming, but it's not going to be in this quarter where you see year-over-year gains, are you?
I don't think you're going to see that great of results, but I think it's not going to be negative. And if we look at Scott's Miracle-Gro, they reported, and the read through there is they had record shipments to their retail partners. Home Depot is a 29% customer. So to me, I think this is also a seasonally strong time for the home improvement companies and the housing stocks, too. I mean, look at D.R. Horton. They had 55% order growth sequentially in their quarter. So I think, you're going to have puts and takes. It may not be a terrific quarter, but I think you're on your way to a nice recovery.
Maybe flat same-store sales or slightly higher, you think?
Yeah, kind of. I think flat to slightly higher. But I don't think negative. And I think after 5 straight quarters of negative comps, this will show a little bit of improvement, and then it should improve as we go through. As again, they have very easy comparisons throughout the year, so I think we should see a better setup.
I mean, normally
the stock's done nothing, by the way, Joe.
But that's what it's come down. Yeah. We had the chart.
Yeah.
But
I mean, it's up 19% the past year. I wouldn't say that's done nothing.
The housing, I mean, it's tough right now. The supply and everything else, and this is a housing. It's kind of a proxy, but there are times it does better if people can't buy new houses. Like you can always make an excuse for why Home Depot is doing well or not doing well, because if people aren't moving, then they're improving, and if housing is strong, then they're doing well for the professional builders. So we'll see what happens with that. You like some other ones? You like energy still?
Yeah, I do. I mean, I think one of the most powerful themes that I heard throughout the quarter that's starting to come to fruition is this energy transition kind of super cycle. And we've been talking about this for a really long time. We're going to spend about $4 trillion on anything that's tied to green, clean power, grid, data center, of course, also AI. And this past quarter, we actually started to see it. You guys were talking about utility stocks last week and how well they have done. Well, that's because earnings for utilities were up 30%. CapEx is actually going higher because of all of these initiatives. And then if you look at companies like Eaton, they had earnings up 27%. Quanta Services up 17%. GE Vernova, they had revenues up 24%. Their book-to-bill in electrification was 2.2 times. So we're starting to see all of this come together. And that's why I think it is really a powerful theme. I own all 3 of those names, and I would be buying any of them on weakness.
So you had the jobs number, which started to, we were the 10-year was sharply higher, so it started moving on that. Then you had the claims number, big surprise, higher. So there's, that helped the markets, that helped yields. We're starting to think you're seeing a slowdown, and then you come back with focusing on the Atlanta Fed at 4.2% growth. And now you're telling me there's no slowdown in sight whatsoever. So which is it?
I don't know. I mean, it's not. I don't think we're going to grow GDP at 4.2% like the Atlanta Fed tracker is at now. But I do think that we're growing above trend. Is that 2.5%? Is it 2.5%, 3%? But the whole point being is we are running above trend. All of this fiscal and monetary policy stimulus that we put in place from COVID until now is actually doing its job. And I think that the better growth is the reason why we're seeing that last piece of inflation really challenged to come down. Right? We're going to get the core CPI this week, and it's going to be about 3.6%. Give or take a tenth or two or whatever the number is. We have made progress from 9.1% to this 3 kind of area, but we're not going to get to 2 if we're growing above trend. And so to me, I'll take faster growth and a little bit higher inflation any day from an investment point of view, because that means earnings can actually continue to go higher.
Okay, so good point from her there, right? That's a good point. In regards to inflation running a little higher, growth running a little higher. Sure, yeah, you would want that, right? But the problem is if inflation's too high, then you also have issues, right? So, ideally, my opinion is, 2.5% GDP growth, 2.5%, CPI growth. I think that's kind of the perfect, magical numbers, in my personal opinion, on how the whole ship runs really smooth. But when you're talking about a CPI 3.5, now you're setting up the consumer to get hit too hard by inflation, right? There should always be inflation in the economy, but that level of inflation, there's limits. It's a fine balance. It's a very fine balance, right? Japan, they went through, decades of little to no inflation, and it's not ideal. Some people might look at that, but you kind of get into lost decades when that happens. And so inflation's good to have some in the system, but too much, and it leads you to likely a big crash at the end of the cycle, right? All right, next one up here, talking about inflation, okay?
Seem to be enjoying a Goldilocks macro environment and that a soft landing for the economy is at hand. For more on the markets, the economy, and much more, we want to bring in Roger Altman. He's the founder and senior chairman of Evercore. And Roger, we're very near all-time highs. You think the market deserves these valuations?
I do, because we're seeing evidence of the economy starting to slow. You see the first quarter growth was down a bit. Job growth was down a bit. Quits, vacancies a little weaker, average hourly earnings growth a little weaker.
I hate this, man. I don't like it when we try to spin growth slowing down as a positive thing. I understand we're trying to slow that growth down because of inflation, but at the same time, I don't think it's necessarily a great thing. It's an uncomfortable feeling when things are deteriorating in the economy, which slowing growth, let's not fool ourselves. Just a nice way of saying the economy's deteriorating. That's all it is. It's a nice way of saying the economy's starting to deteriorate. And it's not as comforting a feeling like you're investing into an economy that's deteriorating versus, let's say, an economy that's getting better and improving, right? And so that's one thing I push back on with a lot of these folks. They talk about it and they're like, oh, it's so good. And I'm like, not great.
And that should pave the way for downticks on inflation, and then allow the Fed a little later to finally turn to ease. I personally think there'll be a rate cut in September. I don't know if there'll be more than that this year, but I think the markets are responding to the positive, to the positivity of this slowing, the prospects for lower inflation, the prospects for monetary ease, and that's why both equities and the fixed income markets have rallied strongly.
I think the big question is how long that process takes for inflation to come down.
Right.
We're going to get other hints this week or other readings with PPI and CPI both out. If those numbers turn out to be hotter than expected, would you take your idea of a rate cut in September off the table?
Probably, because the Fed has to see proof that inflation is improving. And, we have a CPI number this week. Market expects, I think, 3.6% annualized rate, a little better than the last print. But if that were to go the other way, I think markets would react quite negatively because they would see that the prospects for a rate cut are now more distant.
Let's talk a little bit about tariffs, because this is the news this morning. The idea that Biden's looking at raising tariffs, which we knew was coming, for things like EVs and solar panels. I didn't realize that medical items would be on that list, too. And I didn't realize the number that's now being floated out there. Tariffs for EVs, something like 102%, which is significant. That's
So this is a frustrating thing. People think, there's still a lot of people that think Rona was the only thing that caused inflation. And I'm just here to tell people, no. It's delusional to think Rona was the only thing that caused inflation. This all started, in my opinion, it all started back with the tariffs. And when you enact a tariff, let's say, for instance, it's not like, it's going to show up in all the inflation data right away. It's over a period of time. It starts to show up more and more and more, right? As months tick on, quarters tick on, years tick on, it becomes a problem. So we already had started that with the whole tariff situation. Then Rona comes along, messes up supply chains. Then you get a next big lever, right? Then you have government spend like pure insanity, right? Stimulus checks, we know it all, the PPP loans, all that stuff, okay? We don't need to go over all that again. You pump massive amounts of money into the system, right? It's going to get spent out there, which is going to likely cause inflation, right? Let's say I live in Vegas. Let's say everybody in Vegas just got given $1 million today, okay? Guess what? things are going to absolutely go crazy because everybody's going to be buying everything. A Lamborghini in Vegas is going to be selling for $10 million because everybody's going to want a Lamborghini in Vegas because they all got $1 million given to them, right? And so things boom for a little bit, cause massive inflation, then you have a bust cycle after that, right? And so it's very important you understand, this was multi-layers of how we got to this place. You didn't get CPI to go to 9% plus just by one thing. It was multiple things, and then the continued spending, right? And then the Fed acting slow. There's literally probably 5 or 6 reasons we got to that insane level of CPI. And by the way, if we measured things the way we used to measure them back in the 80s, right, and in the 70s, those CPI numbers would have been 15, 20%. 15, 20%, not 9%. They changed the methodology, obviously, many decades ago. I think it was 1983, if I recall. And that changed everything forever. But 9% is really like 15, 20%. That's why most people were like, dude, I'm paying like 15, 20, 30% more than I was paying a year ago. That's what people were saying in 2022, 2023, right? That was a reality. The government said 9%. So it was a multitude of reasons on how we got to this big inflationary problem. If you want to do more tariffs, okay, that might help out some things, but it's also an inflationary thing. You can't deny the fact that tariffs are inflationary.
Fold increase from where we stand right now at 25%. That has to be symbolic to some extent because even at 25%, you're not getting a lot of these cars into the market.
Well, I think what Biden is doing here, assuming that this rolls out as we expect, is trying to protect U.S. manufacturing, which he's obviously focused on reviving, and trying to protect the supply chain, especially as it relates to clean energy products. And also, China is falling back on an old, I would say, tired strategy, which is to heavily subsidize manufacturing, expand manufacturing production way beyond possible Chinese domestic consumption, and flood the United States and flood Europe with heavily subsidized exports. And when it comes to clean energy, where we need our own production, for example, solar panels, I think that's what Biden's trying to push back on.
And the reaction, you think, will be what? From the American manufacturers, from the markets?
Well, there's an ideological debate about tariffs. For example, Donald Trump wants to impose a 10% tariff on all imported goods. That's one of his cardinal approaches. And Trump was a tariff guy during his first term.
Yeah, he was.
So there's a big debate about, how helpful are tariffs really, because at the margin, they're inflationary. But we're in an era where we're trying to rebuild American manufacturing, and we're trying, for example, with semiconductors, to avoid the obvious Taiwan risk of being totally dependent on TSMC for advanced semiconductors. And you have to have steps like this if you really want to do that.
Roger, the first hot inflation number that we got in January, February, that was like an outlier, seasonal inventories, blah, blah, blah. Then we got another, Were you surprised by what we saw? Or have you had this sort of, dovish view on inflation all along? And has your view been shaken? I'm just wondering, I'd like to believe you that we're going to see, cooler numbers for inflation, but that means that we've had like a series of outliers. And when does that become, when do you say I was wrong? Maybe inflation is headed back to 4%?
Well, first of all, I'm not certain, Joe. I mean, I could certainly be wrong.
Right, you said if we get a high number on,
I could certainly be wrong.
Yeah.
But let's step back a minute. This inflation was caused, at least in my view, entirely by the pandemic. I think there's a lot of evidence on that. And so it's taking a long...
That's open to discussion.
Okay, that wraps up this video, folks. I don't want to go any further before I lose my cool. Appreciate y'all joining me as always. Thanks so much for being here. Brand new workshop for you guys. Pin comment down there, 7 steps to 7 figures plus in stocks. That's a very informative 32-minute video. Goes very in depth on each of the stocks, some growth hacks, and how to implement these to kind of change your future. Much love and have a great day.